Welcome to FXStreet. If you like what we're talking about, if you like the videos we are doing, please join us on YouTube by heading over to our YouTube channel and hitting the subscribe button. And if you like what I'm talking about, you can follow me on Twitter at JustAnalysis1. Taking a look at Ethereum Classic, really not a ton has changed with Ethereum Classic over the past, really ever since September. You have a little bit of a dip down here in the 44.60 zone. And on October 27th, we had a little bit of a dip there. Fast forward to where we are now. You can see that on the 9th, we got a nice spike up and an actual close that was positioned for Ethereum Classic to trade in an ideal bullish Ichimoku breakout. But then yesterday happened, and you saw the big dive there. A little worry in risk-on markets across the board, and crypto's certainly affected by that with the Evergrande concerns and inflation data. And so ultimately we see Ethereum Classics inside the cloud again. And the cloud within the Ichimoku system is a horrible place. It's a place I consider, it's where trading accounts go to die. Within the Ichimoku Kinko-Hyo system, the cloud is kind of a place that you don't participate. It's not kind of a place; it's a place you just don't participate in. And a lot of trading systems and theories and methods, they tell you when you should enter, and how to do things. But there's not a lot of trading systems that tell you when not to do things. Ichimoku is one of them, and one of them is don't trade an instrument that's inside the cloud. So we wait for it to move out of it, and because it's in this kind of neutral condition here. And the RSI is still in bear market territory, but it's very close to positioning itself into bull market. But we've got a neutral optics bands reading, and we've got a neutral composite index, and we've got the RSI sitting in the 50 range. It's technically sitting on the first overbought level in a bull market, in a bear market, excuse me. So what we get here are two options for the long and the short side of the market, two possible hypothetical setups. The first is a daily close that would be above the cloud, and that would be around that $60.88 level. So the close needs to be, at or slightly above that level for the entry to be valid. The stop is at 56.89, and the profit target on that would be up at the 77.85 range. On the short side of the market, and this one's a little bit more risky because there remains a lot of bullish sentiment, but when you look at the overall pattern of Ethereum Classic coming off of the highs that were in May, we really have just kind of an extended bear flag here. That's what we have going on. And so this could be the an entry that is part of a trigger of a further corrective move lower, even the beginning of a new broader bear market. But here the short entry would be at 50.45. The stop would be at 54.36, and the target would be down at 37.74, 37.75-ish. That range. Again, the close here, just as it would be on the long side, the close needs to be at or slightly below that $50.45 range. A note on the short side of it, though, is that Ethereum Classic has had multiple very strong bearish short entry options in opportunities within the Ichimoku system, and none of them have paid off. You just haven't seen bears have been unable or unwilling to capitalize on a lot of these really beautiful, ideal short entry opportunities. So while the short entry is there and it's based on technicals and it's based on, it is a really nice setup for the short side of the market. The reality of that is you haven't seen a lot of follow through on the short side. Haven't seen a lot of it on the long side either, but it's more risky on the short side. And that's what I see here on Ethereum Classic. Thank you for watching. Please don't forget to like, comment, and subscribe.